Question for me is, how long can this low vol regime last? So we've been highlighting that we've got VIX seasonality. We typically see late September to October being the period where the VIX turns up. We are just entering into that period now. So if we have a look at these charts, another interesting statistic is that the VIX has had its longest streak under 19 vol since early 2020, which was just before COVID. So it's been about 80 days, and you can see that on the chart here. We highlight, when you see vol so low for so long, and it's not to say it can't go lower. We know that in 2017 it did go lower, but the mean reverting properties of vol suggest that maybe there is some sort of move coming. Now, I'm not expecting a super spike like what we got in March 2020 because of COVID. That was obviously quite an extreme case, but it does go to show that vol markets are potentially a bit complacent again, and it may need a little mini spike to shake things up a bit. Now, the Nomura strategist Charlie McGilligot, who looks at vol in detail, has been tracking the P&L of selling 1 month gamma on the SPY systematically, and he looks at the RSI of that P&L. Okay, and he goes back to 2005 in his calculations. That's this choppy red line, and right now it's got SPY in the 97th percentile and Q's in the 91st percentile. So it's basically saying that the performance of selling gamma right now is so damn amazing that it's likely to pull in investors into the short gamma trade just when vols are near their lows. Okay, and that's the thing about these short vol trades. When the more they work, the more investors want to do them, and then the lower the vol goes, and therefore the less well they are likely to perform going forward, because you're selling lower and lower vol levels that have less risk premium in them. And this is exactly, what happened previously with the XIV trade that blew up in February 2018, which was called Volmageddon, because a lot of retail got into short vol trades via the XIV ETN. Now we're starting to see ETFs being launched by the likes of Defiance, where they're selling 0 DTE or up to 5 days expiry naked puts, which is going to supply a load more gamma to the street, is going to push vol even lower, and it's going to leave these retail investors who are in these products susceptible to very sharp drawdowns if the market does decide to move. Okay, so we do think in the near term, while it might push vol even lower, and we may not see the seasonality we typically see, we do think it's going to build fragility in markets potentially, especially in the retail space where a large amount of capital can get wiped out quickly, just like we saw in the XIV trade. So I don't like to see this sort of stuff going on, where retail products are now being built to just kind of sell cheaper and cheaper and cheaper vol. I think it's quite dangerous, and at some point there's going to be some sort of consequence to it. Obviously, it's very hard to call the timing on, but it does rhyme. It is starting to rhyme with what happened back in 2018. But that product was around for a long time before it blew up. So who knows how long this one's going to be around for. But that's what's going on.